Finance Minister Arun Jaitley wants interest rates to come down, but Raghuram Rajan is not in a hurry. The RBI today kept the interest rate and liquidity ratio unchanged, in line with market expectation, but sounded a bit dovish, hinting that a change in the tough monetary policy stance could happen early next year.
As of now, and this is why the stance remains unchanged, we think that we are well set at this point. But as the information comes in, our sense is that if it goes according to expectations, it will be towards monetary accommodation. The stronger the information, the sooner the accommodation.
In fact, Rajan further lowered the consumer inflation target for March to 6%, saying the long-term risks remain evenly balanced. In its bi-monthly review, RBI says consumer inflation could remain volatile, as the full outcome of the monsoon will determine price pressures. And it seems the RBI and the government are on the same page when it comes to the 4% inflation target post-January 2016. Governor Rajan may be more upbeat about inflation coming down than ever before. And even though he hasn't started cutting rates, he's called upon corporate India to bear with him for just few more months.
I think it's very short-sighted when people comment that you're not helping growth this quarter. We're not talking about quarters. We're talking about years of sustainable growth. And that means creating the framework which will make that sustainable growth possible. We've been working on the framework. We are nearly there. And I would say, bear with us.
And the bankers are in a wait-and-watch mode.
The statement itself is quite dovish, that they are now convinced that, it is on a downward trend, the inflation that is. And also, he has kept the window outside of policy also open. So he might surprise us still. Therefore, I feel, that the rate cuts will happen. Maybe after the budget would be a good time.
Not one to mince words, the RBI governor says he will not follow a flip-flop policy by changing his stance every quarter. Until such time that a clear disinflationary trend emerges, Rajan is unlikely to drop his guard.
One of the reasons I think that he mentions as mid-policy kind of action is he'll probably want to wait for the budget to ensure that the fiscal side is taken care of as well. But post the budget, one would expect that he embarks on a rate cut, maybe even a 50 basis point rate cut. Overall, between January and end of fiscal 2016, I think 100 basis points of rate cut is possible.
So essentially, I think the stance the RBI has taken is that at this juncture, and with the base effect still to play out in November, there is perhaps it makes sense to wait, especially keeping in mind that their objective now is not Jan 2015 and March 2015, and they're now actually looking at Jan 2016 quite clearly. Again, considering the kind of expectations around the CPI inflation numbers over the next couple of months, I would think that RBI would wait till the next policy, because if they waited now, perhaps makes sense to wait till the Feb policy to really go ahead and change their stance and start a cycle of cuts.
I believe that there are enough signs, not just domestically but globally, that there is going to be a permanent deflation pressure, which is going to sort of continue for a while. I think there is a lot of positive sentiment towards India, both in the equities and in the debt market, and that will continue. And a lot of global investors, like cautious central banks, they have a lot of faith in Dr. Rajan. So I don't think it will sort of affect things materially, and I think they will sort of price in the belief that a rate cut is on its way soon.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.